They're bleeding down the LBMA. Yeah, I see this morning that the slight backwardation is reappearing between London and the US again. Alistair MacLeod said in our interview this morning, what could be done with all the metal that was sent from Shanghai at outrageous lease prices and the 20 or 30 million ounces of metal that were shipped from COMEX over there to solve the issue? Delivery is still scheduled for next month and the month after that. As a result, the physical demand is driving up the price of paper, and it's desperate when you come in late at night and dump when nobody else is. In order to maximize the worst settlement they could ever receive, it was done expressly to cover shorts, for effect, and to allow the media to pounce on it and tell half the story without noting, by the way, some idiot dumped it when no one else would. And it, in my opinion, renders a lot of what would otherwise be true statements invalid, and when the US government has suggested and written into draft that silver would become an important mineral in this country, I believe it shows where silver is ultimately headed. Things are evolving, and I believe that what we witnessed was a last-ditch effort by a few commercial banks that are severely underfunded, and the price increase, together with a government shutdown, trade talks with Xi, and other events. Finally, interest rates will be reduced once more. They did not intend for metal to go out of control, and they're stopping it this way. However, I would only argue for a short while. Well, I believe that a lot of what they said was true when you consider it from a mainstream standpoint. It had risen for 9 weeks in a row, completely unhindered. The market was overbought. That's all right. That's all accurate. It had broken through the 5,200 and moving averages by a significant margin. All of that is accurate. It was ready for a pullback, a flush, and a correction. All of that is accurate. Naturally, they would have added, is this the top, the 2011-1980 top where it starts to head down and maybe this is it? If it had been said that way, perhaps search for further assets, Bitcoin, or anything else you wish to discuss. Look, I would have been more willing to accept some of their validation or some of the things that are true if they had simply shared the other side of the story. It invalidates a lot of what they say, in my opinion, by not providing the full story. When all the markets had closed and the New York traders were asleep, the first snowball to be pushed down the hill was sold in the access market. It was gold and silver, worth billions of dollars, and it happened in the middle of the night when there is no liquidity and the markets aren't there to catch bids, so the price is driven down and dumped onto the market at odd hours. It was in the middle of the night when it began. I can't recall the precise moment. The following day they did it at around 8 or 9 o'clock at night, when Asia hadn't opened yet and New York was once more closed. All that does is hit the sell stops that are built into algorithmic programs along the way, which lowers the price, which is why you see a price that is clobbered. This was done as a drive-by shot for effect, to put it another way. The price is fixed and the bids are placed in New York, so no trader in the world with a third of a brain cell would dump all of this at a time outside of New York trading. They would catch all of the demand for 9 consecutive weeks that have been increasing by doing it carefully and gradually over time, even a few days, without warning or waking anyone up to a dumping of metal. Their deal would have been far better. They actually promised themselves the worst possible settlement. Thus the market collapsed as a result of the selling triggering stops. Let's just pause there for a moment and discuss what they also didn't discuss. The market is overbought and has been rising for 9 weeks in a row. If they had said all those things, this is ready for a correction, a pullback, or a flush, according to the technicals. Any validity they choose to put on it is nullified by failing to mention that, incidentally, some moron dumped it in the access market in the middle of the night when there was no traders and no market liquidity. That would never be done. That part is conveniently omitted. The second day, which was completed between Asia and New York, was the other aspect that they omitted. Once more, it's a foolish moment to do it. The price of silver soared back up in a matter of minutes. How in the hell did that occur then? According to Michael Lynch, who does a fantastic job of researching the COMEX movements, Morgan Stanley and Bank of America were the ones who made the purchase. The selling was carried out by European commercial banks, and the purchasing was handled by Morgan Stanley. But why is that true? Morgan Stanley's chief investment officer recently stated that the 60-40 rule of investing, which Wall Street has been using for, 50 plus years, was no longer applicable and should be replaced by 60-20-20. Indeed, put another way, sell half of your bonds and invest the remaining 20% in gold. Morgan Stanley comes next. Then Bank of America chief head analyst Michael Hartnett responds, no 25, 25, 25, 25, 25, 25. 25 short-term treasuries, 25 bonds, 25 stocks, and 25 gold. And in my 35 years of work, they have never ever mentioned that. They would say about 5%. According to Michael Lynch, he has a fantastic Substack, and the two American banks that are stating 20-25% allocation come in and conduct the buying. People ought to look it up. Therefore, the fundamentals are fugazi when we discuss this. The foundations are really solid. You know, back when I first started appearing on your show, I was discussing all of the deliveries that were coming from COMEX. Beginning in 2020, it was highly unique because nobody ever stood for delivery. It was uncommon for the delivery option to be used in the US and London. It is currently being exploited by all of the countries that are standing for delivery of all of the commodities in the world, including Saudi Arabia, China, India, Russia, and the BRICS countries. However, I believe that someone told President Trump that we would be dead if we didn't do this. They're emptying the shelves all around the world and we're dead. They then start reintroducing it under the guise of tariffs. Tariffs are not the issue. All of the gold and silver, worth billions and billions and billions of dollars, are being reforested. Just under 8,000 contracts have already been signed for delivery at 5,000 ounces each so far this month, which is a non-delivery month for silver. Do the math then. Even though this isn't a delivery month, that's still a significant amount of silver. That's quite a bit. Indeed, it is more difficult because it is simple to suppress the price in a game when players are coordinated globally and payments are made in cash. Something is different though when you suddenly find yourself up against not just central banks and sovereign wealth funds from around the world, but also a sizable organization that seems to be based in the US and is bringing in billions of dollars every month in silver on COMEX. Furthermore, the only way to influence a market over time is to push it in that direction. And for a while it was simple to accomplish that. The fact that they are standing for delivery slowly, slow enough to bleed it all dry, but not so rapidly as to disrupt the system as we are almost witnessing in London. They have been gradually removing as much of the system as they can from London for the past 5 years, which is why I would contend that some of the metal flowed back there grudgingly. Because of this, London's float is the lowest it has been since records began to be kept, at perhaps 140 or 50 million ounces compared to 600 million ounces traded daily. What then might go wrong? They are therefore waiting for delivery. This demonstrates the fissures. For a while the physical metal is worth more than the price of the future, which is why we had a $3 per ounce backwardation. In the commodity complex, that is quite uncommon. We really have to get something done soon. The largest line item, interest payments, totaled $1 trillion, and you mentioned $38 trillion in debt. In just 71 days, we increased the debt by $1 trillion. It's speeding up. It's absurd how careless we are with our finances. 60% of Americans are illiterate. 60% of Americans lack a college degree. In an emergency, the majority of people in the nation are unable to write out a check for $5,000. We have no money. We don't have any money. Furthermore, the $38 trillion does not include the more than $150 trillion in unfunded liabilities, federal military pensions, Medicare, Medicaid, and Social Security. And I'm not sure. Politics can be polarizing. After 4 years of policies that were too dumb to be dumb, we've entered a phase when, in my opinion, everything is focused on accelerating the upcoming new system. Therefore, I'm worried that we're in for a difficult moment. And if there is any nobleness in it, I believe that President Trump is attempting to devalue and severely debase the currency in order to eventually restore manufacturing and abandon the reserve standard in accordance with Triffin's problem. We will never have a manufacturing base if we remain the reserve currency. We will continue to have trade imbalances. I think their goal is to eliminate the global reserve currency. Their goal is to revive manufacturing. Additionally, if Judy Shelton is correct and gold is tied to the back of the Treasury market in July of next year, you can resume manufacturing right away with no upfront borrowing costs if you have 20 meters 30 and 50-year Treasuries that are redeemable in gold and have zero coupons and no interest for 20 or 30 or 50 years. And when you dig into it, you realize that stable coins will be created whenever money moves, thanks to the passage of the Genius Act and the Stable Coin Act. Additionally, the interest generated is non-transferable due to their backing by U.S. Treasury securities. Bo Hines, who served as Trump's crypto advisor until August, is the CEO of Tether, for instance, USA Tether. He is currently supporting the CEO of USA Tether, which is already complying with the Genius Act or stablecoin, if I may use that term correctly. They will use treasuries to back everything, which lowers rates by creating artificial demand for the treasury. However, they will take the excess or the interest difference between the treasury and the stablecoin and use it to purchase gold. They'll probably purchase Bitcoin too. Additionally, they will purchase gold to raise it significantly. They have more than $8 billion already. They had just arrived at the mining summit in Beaver Creek. Because we must, they will keep purchasing gold in an effort to weaken the currency and eventually peg the back end of the treasury market to restore manufacturing. Otherwise, there would be a huge divide between the wealthy and the poor, a lack of manufacturing, a large amount of debt, and illiterate and ignorant people. Our children and grandchildren are dead. No matter what, we must accomplish this. And I believe they will accomplish it by drastically depreciating the dollar and allowing gold to rise in value. In my opinion, they will allow Bitcoin to rise and utilize it to settle the loan. There is no conspiracy here. Check out the executive order that discusses revaluing gold as part of the Bitcoin fund that Senator Lummis of Wyoming has been pushing for next year. Additionally, the currency loses value if they revalue it. It has nothing to do with revaluing gold. In order to sell our goods to people around the world, we need to devalue the dollar significantly. Manufacturing must be reinstated. How is that accomplished? You have no upfront borrowing expenses when you tie gold to the tail end of the bond market. To get to the other side, as Andy Dufresne did, we have to crawl through 2 miles of shit, just as in the Shawshank Redemption, and that's what happens with our foolish fiscal policy and our monetary policy that has been in place for so long. We must manufacture things once more in order to reach the other side. We cannot rely on Chinese medications, such as aspirin, penicillin, and everything in between, or on military or aviation parts. With this low level of advanced education, 60% of the population lacking a college degree, and AI taking 50% of entry-level positions within the next 3 to 5 years, we must once again be the engine of production and growth for this population. What then am I worried about? I worry about difficult times. As far as inflation and half-empty shelves are concerned, I believe that we will have to endure a few years of hardship until we can get our financial house in order and resume producing. However, if we can succeed, I believe there is cause for hope. So what do we have to choose now? We have 3 options: try to grow our way out of the issue, default, or inflate. Restoring manufacturing and abandoning the reserve currency is the only way to ever grow your way out. All of the BRICS countries are discussing swapping their local currencies and settling their balances in gold. No common currency is visible. There isn't a substitute for the dollar. Whether in the Southern Hemisphere or here in the United States, everyone used their own money, and gold is finding a common denominator that is confidence within the system. However, something has to change, and I'm worried that if it doesn't, our debt load will just increase, which will ultimately have an impact on the reserve currency. At some point, the rubber meets the road because a currency that is founded on trust has lost a lot of trust due to fiscal and monetary irresponsibility, sanctions, and tariffs that are really sanctions disguised as tariffs. I'm worried about the difficult times that lie ahead. And having assets is the only way to escape here alive. You win that way. The world's largest and most knowledgeable financial institutions are aware of this. And for that reason, every month, billions and billions of money are being used for fighting. What do you know? Organize your finances and begin building up your assets. You will be broke even if you save money. To that one final point. As you can see, the dollar index is declining. Compared to the dollar index, the dollar has lost 7 or 8% of its value this year. It was down 11. Although it has somewhat recovered, the silver price is still down over 70% at 65.60. Then, it's masked, which is the goal. The dollar's devaluation is concealed by comparing it to a basket of other worthless currencies that are valued similarly to gold or silver. And you can see how the dollar has actually depreciated. Additionally, this trend will only pick up speed. The only rule he informed me was that I was 19 when I was almost 20. And it was nearly 35 years ago. Pay yourself first, he added. You'll have to make a purchase. Even if it's only silver coin every 2 weeks, I don't care. What it is doesn't matter to me. I'll dismiss you if you don't buy anything every 2 weeks when you get paid. The sole rule is that, even though I've owned the business outright for the past 20 years, I've kept my word to him, and every 2 weeks I buy something because it's wealthy, not because I want to become wealthy. My savings are involved. Additionally, Ivan, you should learn to let the laws of compounding work for you rather than against you. You should also realize that investing, strengthening relationships, and working out in a gym all require time and effort, and you should pay yourself first, because you know the 5 or 6 years that I've known you have passed in that manner. And that's the way life is. You know. Additionally, it resembles a roll of toilet paper. When you're young, you don't notice it rotating. As you become older, you notice that things are going more quickly. At one point, you even see the cardboard and you understand that time is running out. When I wake up, I ask myself, how in the world did I turn 55? This business was founded 35 years ago by myself. Learning the rules of compounding, making them your ally rather than an adversary, and learning to pay yourself first, your future self was the greatest present I've ever received. And if you were 20 years old and your 55-year-old self could sit down and have a drink together, they would say, "Hey man, thank you so much. You looked after us and our kids, your kids whom you will meet someday. And since you put yourself first, your future will be much better." And I've remembered that lesson ever since. And I've made it mandatory for all of my employees. And at first I believe they all find it kind of crazy. And each one of them has expressed gratitude, telling me that it has transformed their lives, and it will. Additionally, you must begin someplace, and those in the best shape didn't get there by putting in 2 weeks of intense exercise. They do it consistently, deliberately, and religiously. You should save that way, because you'll be 55 years old one day and wonder, where the hell did all the time go? Therefore, you should set aside money each time you receive a paycheck, regardless of whether it's 1 ounce of silver or the maximum amount you may invest in an asset. Currency saving is terrible. It's a good thing to save money,